Cooking with gas. Sorry about that, guys.
Okay.
All right, so let's get back into it. We're going to go ahead and sign the buyer broker's agreement. That's going to protect both you as a buyer and me as a agent. At that point in time, we're going to go over what I'll do for you. You know, how is advertising going to be handled? Will we put it on the MLS? Just basic things like that. After we sign the agreement, I legally work for you. I'm going to be working in your best interest. So that's something that a lot of people, they feel intimidated about going to realtors. Once we sign that paper, I'm yours. I'm working for you. I want to make sure that you close on your house. Okay. Once we do that, we will start to get a little bit more in depth and start forming a team. Okay. That's from my broker, because I'm just an agent, my broker, lenders, inspectors, anything of that nature. Also closing attorneys. One major thing that I do want to stress is the fact that you can, one thing I want to stress is it's best to do all of this in-house. It's best to have your lender be able to communicate openly with your inspector and your closing attorney. These are all things. Now, it's not required that you use what we suggest, but it's going to be our preferred lender, and those are going to be the people that we can quickly and easily get things done. Okay? So next step in our process is actually going to be the financing process. This is where you're going to want to look at your own financials and say, what can I afford comfortably? You don't want to be stressing out because a mortgage is going to be a big commitment. Okay. Some of the options that they're going to offer as far as loans is going to be FHA loan, VA loan, and conventional loan. For first-time buyers, it's typically going to be FHA loan just because of the lower down payment, 3.5% of the purchase price. And then the lower requirements as far as your credit is concerned. You can get anywhere from 580 to 620. Of course, that varies according to person and your own situation, but you want to take that into consideration. Now, at this time, I do want to mention I'm not a loan officer, so I don't want you to treat this as advice. This is just the basics, okay? If you have a question referring to that, then I will be glad to go over that with you as best as I can. But these are definitely things that you will want to discuss with an actual loan officer, just to be clear, okay? All right, things that are going to affect your loan are going to be your credit. Of course, we went into that. Of course, your income, how much money do you make? The next thing is going to be debt to income. DTI is debt to income. That's going to be your monthly debt divided by your monthly income. That's just telling the loan officer how much can you actually pay towards this loan, which is going to be very important. All right. They're going to break down the payments as PITI. A lot of investors probably already know this. It's going to be a principal, the interest on that principal that is associated with the loan, and of course, insurance. So all of that's going to be explained. Again, you need to discuss that with your loan officer. Well, another thing that before I get off of this is you're going to have options. Some people don't have the full money to put down for a down payment. So you definitely want to discuss with your loan officer different down payment programs and grants. I know here we have Georgia Home. That's one of the ones that you can use, and they'll actually bridge that gap between what the lender's willing to pay and the rest of the actual purchase price of the property. Okay, so before we get off of loans, one big thing is I need you to get that pre-approved letter. A pre-approved letter essentially makes it so we can go and look at whatever property within your range. So once you get that pre-approved letter, we can actually go to the next step, which is shopping. Now, this is the fun part for everyone. It's also fun for realtors. Sometimes we hope that you have an idea of what you want, because sometimes we can be shopping for a long time. And everyone has been through that, I'm sure. All right, you're going to want, while you're shopping, you're definitely going to want to focus on your needs. Does the house have what you need? Don't focus so much on wants, but also address the wants too. You know, you need to have your priorities and, you know, consider that when you're out shopping. But once you've made that decision, it's time to put in the offer. Now, this is the part where your agent is going to work his or her butt off. Okay, we want to make sure to present the best offer so that you have the strongest possibility of getting the home that you want. That's going to come from negotiations with purchase price, earnest money, how much the seller is going to actually pay, how long do we have to actually look at the property before we're contractually obligated, and just anything extra that you would want done in that the owner needs to be contractually agreed to. All right. Once all of that is settled and we've presented an offer, the seller can do three things. One, reject it. They'll say no. It's okay. We'll move on. Or they can accept it. We're happy with that. Or they can counter, which means they're still interested, and let's try something else. Let's talk. All right. Then you get it accepted. Yay, we're moving. And immediately after is when your due diligence starts. This is a very important part because this is when you as a buyer you'll essentially be paying money. Okay, you have your earnest money due. You have average in Atlanta 3 days sometimes to have due diligence. We actually just had a deal where we actually did 5 days. So you can stretch that out and you can use that as negotiation. But that earnest money is very important, and that means that actually binds the contract after we have already put in that offer. All right. After that earnest money, which can be anywhere, it varies, but typically it's about 1%. That's when it starts your level of payment. Then you have the home inspection. This is where you're going to hire a home inspector. You don't have to, but we recommend that you do look at the property, see what's wrong with it. They'll have pictures. They'll do a thorough investigation and get back to you. At that time, you will be able to negotiate with buyers to see, okay, we want this repaired or this and everything. Sometimes people can be unrealistic and ask for French drains, but we won't get into that. All right, and at this time, this is when you would do surveys so that you understand if you need to a survey to understand what exactly is going on with the property, easements, and anything else that might affect the actual land. At this time, before due diligence is finished, you have your unilateral termination. That means that if you don't like the color of the drapes, you can cancel it, whatever you want. Doesn't matter. But after that time, now we're getting into the next step. And you no longer have that unilateral termination. So we call it the point of no return. This is very important because if you don't get in that due diligence that you needed, you're going to be contractually obligated to commit to that property, and you have to unless you're going to experience some sort of loss contraction, of course. So this is when you actually focus on appraisals and other contingencies. These contingencies could be you need to find financing. The process needs to appraise for the amount of financing that you have, or even I need to sell my house before I buy this one. You can actually put that in your contract so that it actually protects you as a buyer. Okay. Once you've finished all of that, you can get a clear to close, and you're ready to go to the next step, or you can get a conditional clear to close. That just means that there's something that the seller must do before you're actually clear to close. It's common, but I mean, we won't touch on it too much here. All right, so after you have all contingencies have concluded, you will then be ready to call the movers, start packing, and get ready for that closing day. You're going to want to do a couple things, though. You're not at the finish line just yet. You turn on the utilities. You're going to transfer your services. They're going to prepare a sheet for you that's going to outline how much cash you need to actually bring to closing and any other costs that may be associated with the purchase of the price. Okay. One thing we do warn, because this is common, is don't make any large purchases. Don't take out a credit card. Don't buy a boat. Don't buy a car. It will, I say this because it has messed up a deal. It might delay your closing day, or it might make it so that you don't even qualify for the loan. So it's very important that you don't buy any large purchases, okay? Very, very important, guys. All right, so after you've gotten through all of that, pushed, we still have a little bit more on closing day. This is the final day, and this is a specific service that I extend to my buyers. I go to the property to make sure that everything that was already agreed to has been done. That could be we have blinds on, or those French drapes. But one thing is that on closing day, be prepared. There's going to be a lot of signing. It's going to seem intimidating. The closing attorney will definitely walk you through the entire process. I will also be there next to you, walking you through the process as best as I can. And after that, you receive the keys, and congratulations, you're a new homeowner. That's generally how the process works. It's supposed to be so smooth, but it oftentimes depends on who you have representing you at that closing table. And so I would be happy to represent whoever, as long as they're reasonable. Even if they're not, I like to work with them. But guys, we're going to have a quick Q&A at the moment. I'm going to try to pull up if I can see your questions, and I'll try to address them as best as I can. If there are no questions, that would be perfectly fine, I guess. Nate, yes, we currently are only working in Georgia. I'm only licensed in Georgia. So yes, we only work in Georgia. How do we invest in your flips? Okay, so I was going to answer this one, but actually is going to be a good segue into our next portion of our presentation. So I'm going to turn this over to Chris. I appreciate everyone paying attention to this presentation, and wish you guys the best. I'm going to hand this over to Chris.
So Nate, I will answer your question. Actually, if you don't mind, I'm actually going to save your question to the end. So I'll be sure to answer it. I think we might cover that once we get to the end, okay? So we're going to get started here. Move these questions out of my way. I can't see what else. All right. So what is real estate investing? So I want to go over kind of the general, first before we get into the depths of it, I want to get into the basics of what is real estate investing, some of the common strategies that you'll see used, as you see in the image to the right. You know, investing in real estate opposed to any other investment vehicle is going to allow you to see great returns, and it's just going to be a better investment strategy simply because of its possibilities and opportunities. So hopefully by the end of my portion of the presentation, you'll be well informed and able to take action for yourself today. All right. So what is real estate investing? Real estate investing, because there are so many ways to make a profit in real estate, it's become a very broad concept because, you know, I've seen people make money in real estate in some very, very creative ways. But one thing I can say, and that's common across every strategy that I've come across, is that it's typically the same in every case, where just like in any other investment, whether it's stocks or bonds or anything else, you're buying it low and selling it high. So you're buying it with the intent that it will appreciate in value, and that difference from what you paid and its new appreciated value becomes that profit to you as the investor. So I'm going to cover the four most common ways, four most common strategies that you'll see in real estate investing, and hopefully you'll be able to utilize one of them. So first we'll cover tax liens. This is a process by which investors actually buy the tax liens for the property. So when you own a home, if a homeowner does not pay their taxes, after a while, the government will put a lien on that property. And just like anything else with the government and money, they make sure they get their money first. So because it's a government tax lien, that property cannot exchange hands No other liens can be paid until the tax lien is taken care of first. So by buying that tax lien, you're still you're still that first right to receive payment before any other lien or anything is taken care of. So that's your initial win potential, because once you buy the tax lien, ideally the homeowner can pay that lien back to pay it off from you with interest. So essentially, you're just getting a great interest rate on your invested capital. But in the event that the homeowner is not able to pay their tax, pay the lien, pay it off for you, from you, I'm sorry, that's when it becomes the other win potentially to acquire the property. Because if they don't pay that tax bill within a set period of time, you now have legal recourse to take that property because they haven't paid that bill. So it's a great way to acquire cheap properties. And sometimes this can take a while, because I think here in Georgia, we have 3 years, I think a homeowner has to be able to pay that bill back. So that's something to be mindful of. The next strategy I want to cover is wholesaling. This is the most popular strategy for new investors, simply because it allows you to get invested and see some potential great returns with a short period of time and minimal exposure to yourself. So with a typical wholesale situation, you're buying a property. In Atlanta, what we're seeing a lot of assignments, which is a version of wholesaling, where I've seen investors, let's say you see a property you like, that you know would be a great investment. Well, you'll put the property under contract. And of course, as Quinn said, when you submit an offer, you have what's called earnest money. So that earnest money you will pay, but in the time from your due diligence up until your closing, you ideally will be finding a sole third party to become your end buyer. So with an assignment, you're actually only leveraging your earnest money, and you could potentially make whatever your assignment fee is. So I've seen investors make $15,000, $10,000 by simply assigning a contract, never owning the property, rarely ever they do anything to it. They just secured the deal and sold it to it. And like I said here, you're typically selling to other investors. So you're not really buying these properties and looking for a primary residence or first-time home buyer or something like that. You're looking for someone like me who wants to buy it, renovate it, and resell it for a higher value, and don't mind paying you your assignment fee for the deal. So that's why I said it requires minimum exposure, but you could see a payday with $1,000 earnest money deposit. You could see a $10,000 payday at the end of that. So that's something to be mindful of. Next, we'll go over buy and hold. This is one of the most popular strategies, simply because this has been widely received as the best way to build wealth. Simply because by buying, holding, you're allowing yourself to kind of burn it from both ends. So when you purchase a property, and typically you're rented out if you're buying and holding, you can buy it and not rent it out and hope you sell it for increase, but you miss that opportunity to make that income. So typically the property is performing a debt service. That means that if your monthly payments on the home is $800, you may charge rent of $1,200. That difference, that $400, is your profit month to month, ideally. Now, of course, you have to keep in mind things like vacancy. Of course, you have maintenance and things like that. So this is a different approach because it's more of a long-term play. You're talking about $400 over 12 months. That's not a lot of money if you really think about it over in the grand scale of things. We're seeing this strategy become increasingly popular here in Atlanta and other cities that have high populations and high travel rates and things like that, simply because of services like Airbnb and Stay Here. These short-term rentals and vacation rentals have allowed buy and hold investors to see wild returns in a short period of time. I know just about every investor I've come in contact with here in Atlanta is so excited about the Super Bowl being here next year, simply because they may have an inventory of 10 properties at the time, and they can collect rents for those on a short-term rental basis. Of course, buy and hold is looked widely glamorized because of the income potential and the ability to accumulate wealth so well. But the reality is, buy and hold strategy, you are becoming a landlord. So oftentimes that comes with responsibilities of being a landlord. And I mean, if your tenants have plumbing issues, a leaky roof, or any of those things, you know, you have to perform. And a lot of times legally you have to perform because it's outlined in the lease. So that's something to be mindful of. And of course, you know, you have other options if you don't want to be a landlord. Maybe you'll reach out to a company like Mitchell Realty Group or some other company that does property management that'll allow you to not have to worry about that stress. But of course, that comes at a cost. So that's something to be mindful of. Oftentimes, like I said before, it takes time to accumulate because you're not getting a lot of income on a single property. But I want you to think about this. I met an investor here in Atlanta that had 50 plus rental properties. Now, if he's averaging $1,000 per property, that's a significant monthly income. Now, of course, you know, my favorite part about the buy and hold strategy is that you maintain the asset. At the end of the day, you're keeping the house, you're building equity because the house is performing a debt service. So you're creating wealth by building equity into the property, but you're also creating a revenue stream that's providing income to you. So that's just something to be mindful of. I don't think a lot of people think about that when they think about buy and hold. They just think about, I'm only making $200 to $300 a month. Well, you're also building equity into your home every month. So that's something to be mindful of. And of course, like I said, my investor, the investor I met that had 50 plus properties, you have to be mindful, like 50 plus properties come with significant overhead, a significant overhead. You're dealing with 50 different properties. So that's maintenance on all of that, as well as 50 different tenants. I can only imagine the stress levels. But, you know, sometimes it's worth the effort to see that revenue stream. Okay, thank you, Zoom, for making that known and throwing me off. Next we have, I do want to touch on buy and hold simply because I think Mitchell Realty Group has been more and more interested in this strategy because of, like I said before, the Airbnb options and stay here and different. I mean, Atlanta, I think we keep a bowl game here every year. College sports, major events. It's just a great opportunity for us. So, and lastly is my favorite is fix and flip. So if you're familiar with Mitchell Realty Group, if you've seen the website, follow me on Instagram or on Facebook, you've probably seen some of our transformations. This is a strategy that you see most commonly on something like HGTV or DIY networks like that, where, you know, Chip and Joanna will go buy a house or Chris will go buy a house and renovate it. And what you're seeing is this is called value-added investing. So with this approach, I mean, like the home in this property and the home in this picture, you know, this is not something you would want to live in, but an investor may see a great opportunity here because they can buy it for $40,000 and they can put $100,000 into it and sell it to an end buyer for $250 or higher. They've made a significant payday. And because of this, you see things like this when people talk about gentrification and things like that. I mean, in Atlanta, we're seeing certain neighborhoods where investors are actually taking the top layer up, taking the roof off on a home like this, taking the roof off and putting a whole another second floor and thereby doubling their square footage. And that's some serious value added because of that. The downside, of course, is if this is your first time doing a fix and flip, if you don't have any construction experience, you're going to need a construction partner. You're going to need either a general contractor or a company like Mitchell Realty Group that can come in with you and show you how this is done, make sure your renovations are done up to code, make sure you don't have to deal with, you know, the pain of adding more repairs after you've gotten under contract and the buyer realizes you didn't do 90 different things. So that's something to be mindful of. This is a capital intensive approach. I will be, you know, if this is something you want to be involved in, fix and flip, this can be a lot. If you're doing your own projects, it can be a lot to manage, from the cash and capital and the budget to just dealing with contractors, whether they don't do the work, they don't do it right, they don't do it up to par that you expect. They, it's a lot of effort, sweat equity, whether you actually doing construction or managing construction. So that's just something you want to be mindful of. And next, I'll go into, if you're looking to invest on your own, I want to briefly touch on, if you're doing this, let's say you don't want to invest with Mitchell Realty Group, you say, okay, Chris, I have cash or I have deals that I want to invest in. How do I go about funding my own deals? So of course you have opportunities available to you, whether you have your own savings and retirement. I've actually used a self-directed IRA to invest in real estate before. So that's something to be mindful of. Of course, you have private money options. So maybe you don't want to use your savings. Maybe you want to use, someone else's savings, a retired professional that has, enough capital that they can leverage some of that and stomach some of that risk. Of course, partnerships. Mitchell Realty Group purchased its first fix and flip project through a partnership. So that allowed us to kind of split some of the responsibilities and capital requirements. And then, of course, lastly, hard money. Hard money is very popular, especially when you're starting out. It can be a great asset to you in funding your investment deals. Now, when it comes to Mitchell Realty Group, so I think we're going to get on your question here, Nate, in a little bit. So right now, Mitchell Realty Group focuses on fix and flip projects. Over the last year and a half-ish, we've done about 6. Is that right? I think it's 6, and we're buying 2 more now. So we've got our hands pretty full. And it's just because Atlanta's market is so great right now. And it's just our primary strategy that we like to utilize. Wholesaling has become a part of our wheelhouse simply because, when you have your hands on so many deals, sometimes you can't get them all. And instead of walking away from it or losing your earnings money, we'll wholesale it to another investor and still make a profit that is great for us. And of course, buy and hold, like I said, we are looking to do more buy and hold deals next year. And that we'll be looking for equity partners for equity investors for those kind of deals where we'll be collecting rents, whether it's short-term rentals or whether it's rental property with, a year, 2, 3-year tenant. So that's something to be mindful of there. And as far as how we operate and our approach, it's very similar. I like to call it group economics. It's very similar to what you've seen if you're part of the Tulsa Real Estate Fund. It's a very similar approach where they pool. It's a smaller scale. I think they raise millions of dollars in a matter of a few days. But, we do pretty much a similar approach where we pull our investors' capital together and we deploy it in a way that allows Mitchell Realty Group to execute the investments and generate that return to thereby forward back to our investors. So when you want to get into exactly how, let's say if you're watching and you want to invest with Mitchell Realty Group, one of the things you will, of course, once we have that one-on-one consultation, typically our minimum investment for Mitchell Realty Group is $5,000. And with that, we typically offer a 20% return on that capital, whether it's usually we try to keep it down to 6 months, but sometimes depending on the property or depending on circumstances at the time, it could be 8 or 10 months just because of the deal and the time frame. So that's kind of just the basic overview. I hope that answered your question, Nate. If it didn't, you can follow up with what else you wanted to know. But that's kind of just a general overview of how our investor partners are able to leverage their capital, because maybe they don't know how to do this. They don't know how to start, flipping houses, but they may be sitting on $50,000. So if they want to say, okay, well, Chris, we'll give Mitchell Realty Group $40,000 and we'll expect to see 48 at the end of the term. So I hope that gave you a quick overview of the investing side of things. Let me know if you have any questions, and we'll open the floor for any questions, whether it's the home buying process or the investing side. Just let me know. I'm gonna get rid of this. Okay. And let's see if I can bring up the questions here. Give me 1 second, y'all. Oh, that's not what I wanted. Questions, chat. I see one question. Oh, good. We answered your question, Nate. Glad we did. Glad we did. Anybody else have any questions? Did we have any, how much money, let's see it, have you raised so far? Mutual Realty Group is over the last year and a half, we have north of 200,000 of investors' capital at work right now. We've raised more money since then, but of course we've paid those investors back and different deals. As once they mature, we pay our investors. But right now, actively managed, we have a little north of 200,000. How many investors do we have? Oh, that's a good question. I don't know that off the top of my head. I have a roster of about, I want to say 15 investors. I can't definitively say how many are currently invested right now without looking at that roster, but what's your typical buying range? So Brooke, hey, Brooke, our typical buying range actually varies. So our first house, Fix and Flip project, we bought for $67,000. The one of them we have under contract now, I think our highest one so far is $130,000. Our biggest project we bought at if you go to our website, the Kelly Chopper project, I want to say we bought it at $114,000. So as we continue, we are definitely, Mutual Realty Group is definitely in a growth phase right now. So we are looking, the price point doesn't matter as much as making sure we can generate the return. So I'm more focused on certain communities, certain areas that we know can provide the return we're looking for, and the resale value. I care about how much I'm paying for it, but I also care about how much it's going to take for me to renovate it and how much I can sell it for. Average time frame is, I'm sorry, I skipped one. Is the 20% return net or gross? Nate, so I'm sorry, maybe I didn't make that clear. You get a 20% return on your invested capital. So if you invest $5,000, once the end of your term, you'll receive a check from Mutual Realty Group for $6,000. So of course, if you want to reinvest that interest or reinvest all of it, a portion of it, that's, of course, we have investors that do that. Or if you just want to take it and use it and come back and invest later, that's totally fine as well. Average time frame it takes to buy a home. Average time frame can vary. Let's see, average. Because we're investors, so Quinn went over the process for you, and that wheel of all the steps. When you're an investor, it looks a little different. A lot of those steps get chopped out. So ideally, if I find a home that we're ready to deploy capital and invest in, we can typically move as fast as about 3 weeks. If I already have cash, if my lender is already familiar with the property or the area, and I have a closing attorney, I've developed a team now that I literally had a deal earlier this year where because of it was so much activity around the home, the lender didn't feel comfortable providing the loan. So I, of course, have backup options, and within 7 days, I was able to purchase that home. So that average time frame can vary, but because we're investing and typically investors use cash or hard money, which is still kind of a cash deal, it doesn't take long at all. Do you have private VCs that own part of the realty group? No, we do not. I have had plenty of interest about that, but we have not opened the floor up to that just yet. Right now, we typically just use capital investors and give them a return on their capital. I think what I said earlier, what you'll start to see is next year when we start to do buy and hold deals more, we'll be looking at equity partners. So you won't be owning a part of Mutual Realty Group. You'll be a part of the buying entity with Mutual Realty Group that acquires the property and generates that rental income. So I get 20%, and that is after all your fees. Do you finance your investment properties or pay cash? So actually, Nate, I'm glad you asked that, because what's happening now is what I present to you now is what it is now, what it's been since Mutual Realty Group has been conceived. But what you will see is next year, we're going to shift things and restructure it a little bit. Because right now we actually don't even charge fees. So if you invest 40,000, you'll get 48 back in the time that we agreed with no fees, free experience. So of course, that's been great for my investors. They love it, but I know they're going to be a little upset once things change next year. Simply because as Metro Realty Group grows and to better perform, it comes with a significantly higher overhead. Either we charge a fee or we give a smaller return to our investors. What would the average time frame be for a home buyer? If I start with you now, how could I be in a home by the holiday? So,
like I know him for real. So he said he was gonna
use the iPad.
Yeah.
I'm hoping he'll send it to me.
I'm sorry, iPad. I know you are, but I'm gonna have to mute you. There we go. All right. What would the average time frame for being a home buyer? If I start with you now, could I be in a home by the holidays? So, yes and no. And I'm gonna explain that, because if you are ready, if you are financially in a position to take action today, yes, that's totally possible. I have a couple now that's looking to buy that I met last week. They were already working on a deal. They were under contract and had to terminate because the seller did not do the repairs as agreed. So they're in a position right now, if they find a home, they can take action and purchase today, which means they are no more than 30 to 45 days out from actually getting those keys and becoming a homeowner. So if you're ready financially, it could be 30 to 45 days. Now, if you're not, and then that varies depending on how long it takes you to get ready. If you don't have your 2 years tax returns, if you don't have income statements that show steady income, if you haven't been employed at your job, or you haven't been consistently employed for 2 years, and all those things that qualify you for the loan, that you got to add that time on the front end of that. Are there areas that you concentrate in Georgia? Yes, of course. Right now we're focused on the Atlanta metro area, but honestly, I think Nate or Brooke, you might have asked me earlier about are we only in Georgia? So right now we're only licensed in Georgia to do agency work. So if you're looking to buy or sell, yes, only in Georgia. From an investing standpoint, I wholeheartedly believe within 12 to 15 months, we will be outside of Georgia and investing. Brooke and a few of you, I'm sure, are familiar with Jackson, Mississippi. That's a great breeding ground right now for investors. I've seen great returns, great margins in markets like Memphis, Jackson, certain parts of North and South Carolina, of course, Valdosta, Georgia, anywhere there's a college town and things like that, there's great opportunities. So we'll be looking to spread our wings a little bit more. Like I said, we're in a serious growth mode right now. But as far as concentrating Georgia, for our fix and flips, we like to keep that concentrated to what we can control, what we can maintain. As our team grows, we'll reach out more. So I think that's it. Is there any more questions? I hope I answered them all thoroughly. And just so you know, if you have any other questions or if you want to follow up, feel free. Like I said, my information was at the beginning. Quinn's information is also on the website. You can reach out to us via the website, phone, smoke signal, carrier pigeon, all the above. One more. All right, we got one more. Let's see what we got. Amazon might be moving there too. Amazon might, yes. Amazon might be moving to Atlanta. So in the last few years, the time that I've been in real estate, we've gotten Mercedes-Benz to move here. Porsche has moved here. What's it, EY? They have one here. The new big NCR is here. I mean, you have some really big power players. Of course, you know, we got Delta and Coke already here. And now you talk about bringing Amazon. Yes, this makes me as an investor extremely happy, simply because with Amazon comes high-paying jobs, which means people are going to need somewhere to live and they can afford to pay for it. And I'm going to be there with my arms open. Why, Nate? Why? That's not nice. That's not necessary. You just had to kill my little mood. Thanks, though. Lenox Mall. Yeah, Buckhead is an area that's already, there's not a lot of opportunities for fix and flips, but there's great opportunities for the Airbnb and buy and hold kind of short-term rental strategy. That area, I mean, I know personally, I know a couple investors that own condos or what are they called? Condos and townhomes in the in the Buckhead area, West Midtown, that whole corridor. So Nate, thank you for killing my buzz here about Amazon, but we have some developments here in Atlanta. I forgot to mention the Quarry Park, the Beltline, things like that that's going to allow us to keep going strong. So if Amazon decides not to come to Atlanta, we'll still be okay. Anything else? And feel free, Brooke, Nate, or anybody else that has any more questions, follow-up questions, you can call me, email me. Of course, I'm always on IG, Facebook. You can reach out to me there. All right, good. I think we answered all the questions. I want to thank everyone for participating. I really appreciate it. I look forward to hearing from you about investing or buying your first home. And I look forward to your feedback on our first webinar. So I hope this has been informative and has provided the information you need to springboard and take action. Can you send us? Yes, if you've registered for the seminar, you're automatically going to get the recording. Should probably get that within the next 48 hours. Unfortunately, we had a bit of a technical snafu, so you're going to miss a portion of the beginning, but most of Quinn's presentation as well as my entire presentation is recorded and you'll get that later. Of course, yeah, I have plenty of content. If you haven't, of course, you can always go to our website, browse around, take a look. We have all of our past projects, well, not all. We have some of our most popular past projects on the investing page. The investing portal won't be useful to you right now because you aren't a current active investor, but we also have an investor portal for our active investors now to see exactly a little insight of where their money has been invested and all the relative details to their investment, documentation and all, taxes and all, or something to show people that, yep, the website is the best bet. Hope that answers your questions. Thanks, guys, for showing up. Hope that's been informative, and we'll hear from you next time.